Hello and welcome to a fresh new edition of Bazaar Morning Call. I am Prashant. With me are my colleagues Sonia and Nigel. It's the most auspicious time of the year, guys. And, I just hope that with our changed attires, with our changed location, we're able to reflect some of that here over the next 2.5 hours. Good morning.
Good morning, Prashant. Good morning, Nigel. And to all our viewers, there's Diwali coming up. There's Dhanteras over the weekend. It's a long weekend. So here's wishing all our viewers a very, very happy Diwali. And it's befitting, right, to work from our newsroom today, the place where we spend the most amount of time through the year. So, yeah, happy days.
Well, that's right. Wishing all our viewers, the very, very happy Diwali ahead of that. And in fact, the festivities as well. You guys actually are joining me because on closing bell, almost every day I sit here. So I think I'm a pro in this.
Nigel is the location pro here, so he's going to tell us the ins and outs. Let's just kick this off in terms of how things are set up. Thankfully, it's quiet, right? I mean, you want a quiet wrap out to the week because last 2 weeks or so, it's been absolutely crazy. Just a couple of points to set things up. I think the big driver for markets still remains what's happening on U.S. yields. So the U.S. Terminal rate, right, what is called the terminal rate, where the Fed rate will peak out, that made history last night. Market pricing of the Fed's terminal rate is now above 5%. I mean, that is absolutely astounding. The silver lining for us is that the main channel through which most damage gets done in emerging markets when yields in the U.S. spike is the dollar. And the dollar is relatively well behaved. The big spike in yields is not showing up in the US dollar. And we've got good earnings. I mean, I think that is a big support here. Axis Bank has reported absolutely blowout quarter. Canada, yesterday. So financials and banks still remains, I think, the best hunting ground if you're looking for opportunities. Sonia.
So, when you say quiet, right, that most of the market is on leave. I mean, there's a long weekend coming up and Monday is a holiday, Sonia, Wednesday is a holiday. That's what quiet means. We're the only ones working here.
I would like to believe that, the audiences are watching us in rapt attention. I mean, all of them. No?
I think except maybe my mother and Nigel's mother. No one else is watching us today. Okay, but the big cue for me this morning definitely are the blowout numbers that came through from both Axis Bank as well as ITC. And I think the market is going to take that with both hands, and that's the festive cheer that we're getting into this morning. Stellar quarter from Axis Bank, a loan growth of over 17% year on year, margins at a 26-quarter high, and a lot of brokerages have upgraded their target prices, earnings estimates, JP Morgan case in point. ITC as well, super performance, no complaints at all. Cigarette business delivered a 23% revenue growth, and even other companies, like Bajaj Finance, for example, decent growth coming in there. That's the one positive surprise. The other positive surprise, according to me, is that FIIs have now bought in cash after 9 days of selling. So they bought about 1,864 crores in cash overnight, and DII sold about 886 crores. And of course, the global market cues are not that great. The Dow is down a bit overnight, but give and take everything, we do know that there is this stark outperformance that India has seen between last Samvat and now. And even, yesterday as well, the Nifty held on to that 17,500 mark. So despite all the challenges, key levels are being protected.
Sorry, same time yesterday, it was looking a lot more tricky, right? With the same kind of cues from overnight. So similar 1% kind of cut on the US market the previous day, but yesterday the SGX was down a lot more. And I was saying this yesterday that maybe the dynamic of outperformance comes back, relative outperformance, and that is essentially what played out. Let me just quickly outline, and I think the trouble is global, nothing else. So yields in the US are basically breaking out into new highs. The 2-year, which is the most sensitive to what the Fed is likely to do, that is topped 4.6%. It continues to make new cycle highs. The 2-year, the 5-year and the 10-year were up 9 basis points and 10 basis points respectively. And as I said, the market pricing of what the Fed will kind of do in this particular cycle is now moved up to 5%. So, I mean, if you believe market pricing, there is a lot more to go. Also, it did not help that you had Fed officials saying that, well, we will stop hiking only sometime next year. Then we will keep rates high. And then after taking into account how it is fed through into the economy, we will decide what to do and maybe hike more. This was the Philadelphia Fed president. So, it kind of added to the pressure. The market, by the way, held up nicely. It only sold off the US market in the second half of trade. The silver lining, as I mentioned earlier, is that it's not showing up in the dollar. I mean, higher dollar and, of course, higher crude prices are the two main channels through which all of this impacts emerging markets like India and other emerging markets generally. The dollar index faced resistance. I mean, it did recover from the lows, but it's holding at the 113 kind of level. It did not see a very large move. I mean, I'm talking about commensurate move to what we saw in the yields market. So the way I would put it is, even in the US, right, we've bounced off the S&P from 3,500. There is no clear directionality. Maybe, and I think this is a question which will be answered in the coming days, the very small mini bear market rally in the US is already behind us. We'll only be wiser in hindsight, but it's gotten a little more cloudy, a little more foggy, but no real clear directionality. I mean, you can't say that, well, things are headed south once again. Maybe it kind of meanders here for a bit more. We've got the monthly US options expiry later today, and I think that is always an important event to watch. You usually see, not usually, but more often than not, see large pronounced moves there. Coming to the Nifty, and I think I would go with what I said yesterday, a relative outperformance, I think. I mean, that's basically going to be the dynamic which very much reasserts itself. The market, by the way, bounced very nicely from the day's low, but it closed just under 17,581. This is nothing but the 61.8% retracement of the fall from the 15th of September high to the 30th of September high. If this is crossed, the next level is 17,700. That is basically the level on the upper end of the rising channel from the 30th of September low. So again, these levels are not very far away. A good day and these will get taken out. On the way down, I mean, I think the big supports are the 40 exponential day moving average and the 20-day moving average, which are 17,300 and 17,200. And on the Bank Nifty, which I think is the clearer of the two between the Nifty and the Bank Nifty and the banks, 39,850 is the support. 39,850 is the support on the Bank Nifty, which, by the way, I think was the low for yesterday as well. We almost got to those levels. And yesterday, there was a bit of a clear differentiation. The Bank Nifty was down, but the PSU Bank space rallied on. The PSU Bank index was is up 9% with 1 day to go this week. So I think, I mean, that's been quite a decent move that we've had. So I think, I mean, the dynamic broadly is relative outperformance, which very much is at play. Nigel, what are you watching?
Well, you know, for me, two factors played out yesterday. One is the stability in the rupee. The rupee pulled back, and that coincided with the Nifty as well recovering. And the second factor was it was weekly expiry. So those call writers, they got stuck on the wrong side. So there was a bit of covering that we saw. So both those two factors did play out. Now, the dollar index, as you said, it's looking a little bit stable at around 113. Yeah. It tried to move yesterday higher, but I think midnight, again, it went to around 112.5, 112.3 odd, which is good news from an emerging market perspective. You don't want it to run away to around that 114.5 that we saw earlier, but that's one of the key monitorables. The Nifty Bank yesterday took a bit of a break, but the IT index, that came to the party. And if you're looking at it, you know, in the last 1 month or so, the IT index gradually has been moving higher. In fact, it's up closer to around 7%, while the Nifty is up only around 1%. That's telling you the kind of outperformance you've seen from the IT index. Now, the Nifty IT index now is only around 8 to 9% away from its 52-week high. I recall when it was 20-25% away. So it's seen a good recovery from the lows. Getting past the 70,650, that's going to be very important. We have big triggers. Reliance Industries comes out with the numbers. You have ITC reacting to its numbers. And big banking names as well will be reacting. So the ingredients are in place if you can go ahead and take out those higher levels. What did the FIs do yesterday? They were back to their shorting ways. They added shorts, more than 20,000 short contracts. And now the short positioning is at around 72%. And since we have expiry next week, it appears there's a bit of a short straddle at play. What is that? The 17,500 call as well as put. They are getting written, pocketing close to around 280 to around 300 rupees and bracing for a bigger move. You know, 17,200 to around 17,800. So the goalposts for this expiry, at least, they are set at both these two levels. On the downside, you have a feeling that, you know, that base has moved up to around that 17,300, 17,350, at least in the near term. And if we can conquer that 17,700 mark, then the bulls will like another dash towards that 18,000 odd mark. But the most important cue for me is, again, the stability in the rupee. You don't want to see that one running away. Yesterday, it pulled back a little bit, and you would like it to hover around these levels or maybe strengthen a little bit, which will be difficult because the dollar index is holding like a rock. SGX Nifty earlier today was indicating a bit of a red start. Looks like it's participating, I think, in the festivities. It's moved into the green and now indicating some green. We'll start off close at around 17,600, which is good news, Sonia.